Thank you for visiting the Coin Lady channel again. Dear everyone, Bloomberg just broke the news that the SEC is in talks with companies to become clearing houses for the US Treasury. Now, Yahoo Finance did cover it, and the reason is that I refused to pay to unlock it. Whatever the case may be, it contains a wealth of data. To save your men time and avoid boring them with irrelevant details, I use Chat Captain to summarize the material. I want to dive into the meat of the matter, the facts that will be of great significance to everyone watching, and we have a complete breakdown here. Consequently, numerous market players are interested in the SEC's plans to formalize a roll in December, which will require the movement of a large amount of Treasuries trading and most related repurchase agreements to a central counterparty clearinghouse, CCP. A top official in the SEC's trading and markets team welcoming this interest, we would want to stress that market competition is good. Although just a small portion of daily trading passes through it, the $27 trillion Treasury market is now cleared by the Fixed Income Clearing Corp FIC, which is a subsidiary of the DTCC, called the Depository Trust and Clearing Corporation. The possibility of new clearing houses joining the market is in line with government initiatives to strengthen market resilience after trading freezes. Among the possible candidates vying for permission to clear U.S. Treasuries from regulators is CME Group Incorporated. Midway through 2026. Central clearing houses are projected to receive around $3 trillion in daily cash and repo trading as a result of the new SEC regulations. Regulators are looking closely at the basis trade method that hedge funds utilize, which involves repos, and this change could affect it. Here we have something that really piques my interest: the emphasis on U.S. Treasuries. Treasury notes are being tokenized, which is already known. At this very moment, already, the overall value of this market, or the amount worth tokenized, is over $1.2 billion. The top two contenders are Ethereum and Stellar, respectively. The XRP ledger is now empty, as I have mentioned on numerous occasions. Nevertheless, Franklin Templeton and BlackRock are already present. There are a few more well-known names here as well, such as Wisdom Tree. Also, there are a couple more. However, the most important point to note is that there are now some significant movements occurring in U.S. Treasuries. Not to mention, when we bring up the topic of these new companies becoming clearing houses for the U.S. Treasury. In our opinion, might Ripple maybe join this as a player? Yes, I think so. The recent talks with Ripple are the reason behind this, but keep in mind that Treasuries will be tokenized as soon as we examine them. As far as we are aware, they will be tokenized. One important component of this was BlackRock's tokenization of U.S. Treasuries. Sure, let's have a look at that now. This is a $27 trillion market, and it is only now becoming apparent. Tokenizing and trading Treasuries around the clock, every day of the year, is a must. In a flash, things can take a thrilling turn. Will it be limited to certain players only? Not at all. In my opinion, there will be a number of winners, and some very famous people will be involved. Still, I can see it seeping into the cryptocurrency space and attracting a number of big names like Ripple or Stellar. I mentioned that since it is already known that Stellar is involved. Ripple with XRP wouldn't be shocking to me. And the XRP ledger will soon join Ethereum in this. I say this because the institutions are now ignoring our role, which they saw as a chance, and they are based in New York. It was possible for you to secure a position at Ripple and work on institutional DeFi in New York. However, they likely filled that job since it has now vanished. However, London, UK is still one of them. Keep in mind that this is a systemic problem that resists reform efforts. An XRP and the XRP ledger are the only things that matter. I see. However, the topic also revolves about defining efforts using tokenization. Here, we have important duties to fulfill. Not only that, but they dissect everything you're planning to bring. I want to focus on what you're going to do, right? Then we have a couple other things about the potential down here. This constitutes a complete and utter embrace of tokenization. Tokenization was the topic of their comprehensive presentation. Every step of the way, including its eventual connection to the Xrp and the tokenization of Xrp itself, is already in motion. This is happening, and we are aware of it. Even in this space, we need to establish a long-term ecosystem and create demand by locating banks, other lending organizations, and other partners that are keen in investing in tokenized physical assets. Beyond that, there are numerous projects centered on ETFs, and more initiatives that challenge established institutions. The DeFi camp continues to get the bulk of the attention. The reason behind this is that we are on the cusp of seeing a major institutional DeFi adoption. Plus, tokenization will be fully implemented across the board. To be more specific, everything that can be imagined will eventually be tokenized: treasuries, stablecoins, real estate credit, etc. Larry Fink from BlackRock is the one who told us that. Now that we're back to talking about US Treasuries, clearing houses, and companies becoming entities, it makes you wonder if this will affect the possibility of tokenizing US Treasuries. It would be reasonable if these new entrants started to reach to the level of a clearinghouse. But I'm bringing this up and discussing it because of this meeting over here. Major props to subjective opinions now, Ripple and Spectacular. Were they? The US government money fund, Franklin On-Chain, has already tokenized more over $380 million worth of US Treasuries, as is well known. At a roundtable discussion in Washington, D.C., on April 23, 2020, with Nellie Liang, U.S. Department of the Treasury's Undersecretary for Domestic Finance, we will be discussing the technical and regulatory requirements for upgrading the legacy capabilities of central bank money. We will also be looking at the potential implications for consumers, investors, and businesses. Ripple and Stellar are here to help with this extensive subject. They also discuss the future plans for the U.S. financial system to incorporate stablecoins and the tokenization of CBDCs, as well as the advantages this may bring to economic growth and stability. Well, that concludes our video. Like and subscribe as usual, and feel free to leave a comment with your opinions. Coming up shortly, farewell.